Welcome to TradeTheMBI.com. This is John. This report is for the 12th of October. And, well, we had some fill-in action that finalized what we were looking for from, if we go all the way back over here into July, we ended up with the start of the algo activity at these positive extremes. It started at this candle right here with a low of 27.36 and a quarter. And the second day produced the exact same positive extreme, which took place right here and gave a low of 66.75. So this was our two expectations. Usually the primary one is your first go-to. And then we had a very long deviation where you heard everybody whining about how overdone the market, and we hadn't had a correction of more than 1% for 16 million years, and that, the dinosaurs were going to be resurrected or something. And then, of course, we got a legitimate sell signal. We'd had a couple of others, but they hadn't produced much because the reality was they got cut off pretty quickly with relative, buy signals, and that postponed things. Even in this downturn, the only difference was we never got the steel dipping below the red. It kind of trailed down with it before popping back up, which gave some support to it, but it's not sufficient enough to overcome the fact that cyan continued to remain. And we all know that cyan, red with orange and steel in between, is just a continuation, which in this case was lower. Now, did we have a target? Sure. Did we know that it was going to all happen in one day? No, you never really do. We could see it building, and the fact that they had held it up pretty well was surprising. But even despite this, we weren't seeing any confirmation that midterm buyers and that were coming into it. And then you couple in time of the month where pretty much the fund money had been used up days ago. It left a liquidity drain. So what did we do? We filled in the positive extremes, and as soon as we filled in the positive extremes, we got a little bit of carry through, which took us very close to the lows right back down here, filling in this dip below the red line, and pretty much eliminating all the necessary retraces. And at that point, that spurred significant buying because this did what they needed to do, and they took their money off the table at that point. That's exactly what they do, and this happens all the time. But I was actually discussing with a friend just the other day, because even with this dip and this kind of a move coming back, a move that goes up 2/3 into this bar, so right around, anywhere from the 38% line at, for the NASDAQ, and if you look at the S&P, if you get towards the 28, 29 range, you've created what we would call a delta V reversal, which would propel us to new highs, despite what's just happened. That this is the irony of it. But a lot of this has to do with some real issues that exist, and obviously this cleared out a lot of people who were weak hands or whatever. And then also now the Friday we do get into a margin call situation, so the market really needs to rebound strong if it's going to prevent that taking place. Now, when all that selling takes place, if you are trading from the European side, you moved your money right back into euros, going back in, and that pushed us right back up there, and that should bolster the S&P, give it the lift that it needs. And you can see we clearly had the orange dip below, perfect buy configuration from that standpoint, and then also now already green above cyan, but that doesn't matter because you still had orange underneath green, which still would have been a buy. It's very clean that way. And a flight to safety, but there's not going to be much safety there considering rates are going up. That hasn't changed. The ease off in oil definitely is going to help, not anytime soon. The rise certainly pushes things, and it'll be a long while before price comes back down. So it's always interesting how that works. It's quick to rise, at least you feel it at the pump in that, but before it takes a retrace. But positive extreme was right here, and we filled that at the open of it. At that particular point that you were below the ABM green, and this is my whole point, below the yellow. And you could follow it to the green, see if there's any turnaround support there, and when it breaks, look out. And this has been interesting because it hasn't been all that weak. You had the crossover back here. At the same time, it was the next bar over before the green cross, but it didn't move below red because things had been so elevated. So a little bit more tricky before it really came in with a full DOC spread. And of course, this sparked the turnaround we saw right here, which was the bullish snake. Happened the other day, and then boom, look what happens. It just takes off when you get that kind of setup, and that's because people are realizing, hey, there may actually be inflation. Go figure. Well, let's go back to the beginning of this day, which started all the way over here. So many bars to cover on this. It was crazy. We came down, and the critical part about these is I love to look at is that steel, when you get into these trend moves where you're just heading lower, it becomes powerful because until you get a reset, you're not going to have a sustainable run to the upside. So that happens right here, coincidentally a short signal, but nonetheless critical at that point, because at that point you begin to realize, okay, if I get a decent buy, I already had a reset of it from back over here. I've got an opportunity to take that. Now in this particular case, we got into this mid-range, and green failed again, and then gave an additional one by the time you got right at the 50%. And you're going to get that with a lot of longs, where this will happen, where you get that initial burst, and then that orange breaks above, or even the cyan then moves back above green, and it stalls for a little bit. And ABM usually accommodates that quite well by just trading sideways. Always the difficulty of it is because you've gotten a signal, and usually what happens is you get plus, and then it just keeps coming back to either even or you're even slightly red before it eventually does the breakout. And this is where it becomes interesting with the P pivots and being able to see those take place, because again, it's that 7 level on the DOC red that really starts to indicate it. And of course, you begin to see it too from a positive shakeout standpoint. They both perfect correspondence to exactly the same spot. Did produce positive extremes, so that became a retrace level, which you can see marked right there. And then we deviated from it for quite some time before putting in another classic DOC spread in a perfect fashion. And the ranges on this were phenomenal, because it helps when you do it like that, because then you can see how far, so you go from 54 to 80. Yeah, that's quite a move. Even from these positive extremes up here at 87, dropping all the way back down to 74, these are 15-point moves in these small ranges. And then these upflows with the cyan being under red as far as they were all beautiful. And then again, great DOC spreads. This one moved all the way down to the 50%, came all the way back up, producing another short snake move right about at the same spot. And then that just kind of traded flat to weak and cascaded. And then we ended up with, again, these meeting points where the green will go above, and then you get a rejection of it. And then boom, it starts a new cascade lower. New buy signals were coming in. I mean, it was all over the place. We had a lot of gold below the 23s in that. Sometimes they faded back, made new lows, and then catching fire on the rising red. And in this particular case, it was very interesting because you had gold with red above the -7 on the DOC, and it stayed there. You never had a breakdown going through. So when this orange finally dipped back down below, it became a very powerful buy configuration. And that actually led to, well, if you go back, there's that 27.59, that was that retrace value from before. And then we made a whole nother series, creating a whole new one, exactly at the same spot. The exact same spot. This becomes poignant. And then, of course, you make a whole nother series of positive extremes going through, new DOC spread, and sure enough, you revisit that spot, and then you revisit it at a point where you get no reset of the steel at all, staying in that upper zone, and that left for a nice continuation. Then we started getting into that extreme, that below -20, where you start to look for it. Wasn't anything happening on this one, and then we ended up with that super deep move. Got a little interesting here because this was quite strong. Usually you would have expected a little bit more retrace towards the end of the day on this final setup. It did come back to, the original points, but really stayed quite powerful from a DOC red standpoint, and we went from very deep in the shakeout to improving quite a bit. You can see, though, that we ended up with gold. It was below the 38, dipped down just to the 23%, and then proceeded to make significantly higher pivots, finally producing a third one that was even the highest of them all, and that was right about here. It was in the 2730 range, and then we shot up all the way to, the highs were around 66, 65 range, which was pretty significant before. Put in a couple of DOC spreads. There was the one that was over here. You had another one that started just right about there, pretty much equivalent, same price. And then we broke down again in post-market, and that led to a nice bottoming out just at that oversold reversal points that you look for, but didn't get the dip below the orange until right over here, and it was just above the 23%. So classic maneuver, and then boom, shot above the -7, and that's what we're in the middle of right here. So literally from 43 to now 80, so almost a 40-point up move, and actually we're reading plus 34, so pretty phenomenal. But yeah, all positive extremes, every one of them. And it starts right here. Actually, we should just change the color on that while we're here, because that's got to get filled. But all these other ones now can just be deleted, because they've done their thing, and they've been filled. And that way you don't end up with too much clutter on your chart, because I keep a lot of them simply because what will happen is, days later, all of a sudden you'd forgotten about it, and all of a sudden it shows up on your screen, and you can see it down below there, and it's like, oh wait, I had that. And then I'm looking at throughout the day from the daily chart, and I'm saying, okay, hey, I'm here at 67, I'm expecting 36. That's 30 points. And we were plus 15 on the day, and I'm thinking, okay, we're plus 15, I'm expecting down 30. That's a 45-point move that I'm looking for. And sure enough, it executed all of it and then some, and left quite a few trades in between. And you can see now why, though, when I was pointing out earlier the big ranges that I had in these stops, because when your volatility increases like this, you have to be prepared for much bigger swings. You're trying to trade, like we were when we were at, 1/3 the volatility, and you got a, 5-6 point stop, fine. Now all of a sudden you've tripled that volatility, and you think that same 6 point stop is going to work. No. I mean, this thing was moving that far in a couple of bars instantly. So it takes a little bit more of a stomach, but the rewards are far bigger if you're willing to follow what the signals give you. And so that's relative to everybody. A lot of people like to go less risk in high volatility. I usually trade heavier because the returns are so much larger. But because you can make in a couple of days like this more than you would for throughout an entire year. It's just a matter of being patient for them. But either way, the signal is still super effective no matter how you look at it, and it doesn't matter whether you're trading a couple contracts or quite a few. It's still an extraordinarily easy way to gauge the market and follow the broader trend moves. And that's the long and the short of it. What do we expect for the day? I think that you're going to get some bouncing back and forth within this. This looks very attractive from the buy side of it, but shorts do have a lot of people sort of squeezed, so I wouldn't be surprised to see some of this give it back in between. I'll be looking at the 2800, because that will be the 38% range from a daily standpoint. So if they can get back to there, that would be quite a powerful situation. There really isn't anything underlying that suggests that the market has to crash, despite what people say. The economy is still doing just fine. This was long overdue. There are some contagion fears, like I said, about Europe. Nothing has changed about that, and nothing has changed as far as China and the trade thing. But that was a bit more publicity hype than it was reality. So you can't always get worked up over headlines because they really don't mean a whole lot. This was an opportunity for the algos to take advantage of a little bit of liquidity weakness, and boy, they exploited it beautifully. So I was happy to be around for it. As always, though, trade well. We'll talk again later.